Good afternoon. Welcome to GrainTV. It's November 25th, 2013. I'm Logan Burgess. To my right here is Cody Bills to help break down a generally positive day for the grain market here on a Monday. Jumping into the quotes, you can see we had December corn up 2.5 cents. Soybeans for the January contract up 9 cents. Chicago wheat was up 2 3/4. Kansas City wheat was up 2 3/4 there as well. We're real happy to announce here at Grain Hedge we now have a great mobile trading app available on the iPad, iPhone, and Android. If you want to take these live quotes with you on the go, visit us at grainhedge.com to take a demo or give us a call at the office. Our number is 877-472-4607. Cody, let's talk about soybeans here for a minute. Relatively strong day today for beans, up 9 cents, and we had a breakout from that area of resistance that we were looking at there on Friday. In your mind, is this a true breakout or is this a fake out?
Well, you know, I think today we didn't see the volume that I'd like to see to give me a lot of that conviction that this is going to be a strong breakout. However, I do think there's a chance that with the light trading volume, you could end up drifting maybe another 20 cents higher here by the end of the week. The bottom line is I think we need to be very cautious right now. If this is a fake out, and we see some trade action, some selling pressure tomorrow. If we end up closing back across the trend line, the high side resistance trend line here, and we close below the lows or the open of today's trade, if we end up closing below that, I think that's going to be very bearish, and you're going to want to get a little bit aggressive on making some grain sales. I don't think you want to wait for this thing to roll back over to the low side of the range here. But with that being said, I do think that we could trade a little bit higher, but just be ready, you know, because this thing could turn over in a heartbeat, and we could be rolling back over to the low side in just a few trade sessions.
Yeah, you know, certainly one thing that helped out the action, kind of the technical footing that we had coming into today's trade session was some very good export inspections reported by the USDA here this morning. Take a look here. The red bars show weekly export inspections. The green line is the seasonal pace needed to meet marketing year expectations here for the USDA. So you can see here once again for the 5th week, really strong export inspections. Right now, our models are showing soybeans running about 142 million bushels ahead of pace to meet USDA expectations for the marketing year. So certainly a lot of traders right now are looking at this bean market and thinking that the USDA is going to need to make a revision to expected exports in the upcoming December WASDE report.
Not only that, but we saw soy meal moving higher today. That was also spilling into the soybean complex there. You know, they were up $9.50 a ton, and it just goes to show you there that soy meal is really, it has some strength, and I think it's going to continue to help soybeans. But you know, like I said, it's getting closer to its highs. It may find some resistance up here in a few trade sessions. So just be careful because these things can whip around, especially in light trade volume.
Yeah, certainly. You know, let's take a look here at corn and wheat in today's action, Cody. A relatively quiet day for corn. Really not a lot to talk about. Certainly some action, though, in the wheat market, in my opinion. We saw some relative strength early in the trade out of the Kansas City wheat market. Over the weekend, we had some very cold temperatures in Kansas and Nebraska. That seemed to get some people concerned about the good to excellent rating on this crop as it's going into dormancy. You know, some people are going to discount that and say, really, the quality of the wheat crop this year doesn't have a big bearing on final yield. But certainly in today's action, it seemed like we found some buying interest as a result. Another thing helping out wheat futures today was the announcement over the weekend that some sanctions are going to be lifted against Iran. That raises some hope that on the export market we're going to see more demand there. In the overnight session in the Paris wheat market, we saw Paris wheat trade to 5.5-month highs. So certainly very supportive there when you think about how competitive the U.S. market or the U.S. wheat is on the global market. We saw a little bit of an indication of more competitiveness late last week when we finally saw a tender go through to the Egyptians. So right now, I think, you know, if you take a look at the technical landscape on this wheat market, in my opinion, we put in here some near-term lows. And right now, I think this thing could drift a little bit higher, given the export information that we got today.
You know, I agree with you 100%, Logan. And you know, just to recap, and I think you made a very good point. Even if we don't get sales to Iran, the fact that we saw Paris milling wheat move so much higher, I think that makes us more competitive. And like you were saying, we could easily win some more sales here with the global wheat prices moving higher here. Other than that, guys, that wraps up today's show. And if you have any questions about what we talked about, or if you want to take a demo of the iPad trading platform, iPhone or Android, give us a call at 877-472-4607. You can follow us on Twitter, follow us on Facebook, and we'll see you tomorrow for GrainTV.